Hey everyone, so today I'm going to show you a couple of Zero-DTE trades that I took this morning. I just did not get enough time to make the video, but I'm going to show you the exact process, two profitable trades that I did within few hours. I was just in the trade for maybe 2 hours altogether. So I just want to take you through my process and then show you exactly what I did in two different products. I did not just trade the cash product, which is the S&P 500 index, which is my usual go-to strategy for Zero-DTEs, only because it's cash settled and not the future product. The E-mini S&P 500 futures, which is /ES ticker, is also offers Zero-DTE options. But again, the underlying at expiration, it is not cash settled. It is settled into the future, meaning if you lose the trade, then the future is handed over to you. So the future is delivered in your account, and therefore the money will be deducted from your account based on that future. Now, what can you do with that future is like just basically either sell it back in the market or close it out or take the loss and get back into cash. Before we jump in, I want to show you exactly how I set it all up. I did two Iron Condor trades. One is /ES and one in SPX. And I want to show you the exact margin requirements and everything I looked at, the strikes, the expiration, obviously Zero-DTEs, and where is the current trade sitting and why am I about to take it up right now, which is 1 hour before market close. I put it on around an hour ago, but let's see what the timing was. So here are my fills, the actual fills in the paper trading account. Obviously this is not my real account, but it's great for practice purposes. It is great to get your hands dirty in this Zero-DTE space, which is very volatile and it comes and goes within few hours. So it's really important to get your hands dirty, get all the reps going before you go into the live account. So let's take a look here. I sold a E-mini S&P 500 future contract for $3, right? In the credit, you can see the credit. Let me just get my marker out. So you can see the credit here. First thing you need to see is these are the filled orders, okay? There were two orders that were filled, one in ES, one in SPX. Now, the ES trade was filled at $3, which means I collected $1.50. That's how the E-mini S&P 500 futures market works. Now, whatever number you see here, because it's the 1/5 of the main index, you have to divide this number by 2. That's the actual dollar amount that you collect. Now, here, this is the SPX trade, which I sold for $2. Now, what did I do? How did I sell? And what went through? So this was done at exactly at 11 o'clock Pacific time. And right now the time is 12:10. So I've been in the trade for 1 hour, just a little over 1 hour. So right now the time is 12:10, which means you can also see it from here. And I'm trying to close this trade. Now, it looks like, yeah, I have two contracts here for the same amount, same numbers. For some reason, two contracts went in there for /ES. Maybe because I was trying to cancel and replace one for a higher price. But anyway, I would take it because the profit right now is about 135 on both, and then $100 here on the SPX as well. So in terms of percentage, because both of these products move exactly the same way, they decay the same way too, almost exactly the same way, the percentage of the profits is almost exactly the same, about 45%. And that's our profit target. So for these Zero-DTEs, I will even take 30% off. So meaning when my trade is up 30% or 35%, I'll just peel it off, get back into cash, buy it back, redeploy capital into something else. So buying power effect. Now let's take the realistic look at the amount of percentage that we made or ROI we made on this trade. Before we do that, I want to take you through how I selected the strikes and what I did to set this trade up. Now, when I was setting this up, I chose 16 delta strike on the short side, which is what it currently is right now. And my long strike is at 5 delta. So that's what I chose on the ES side, E-mini S&P 500 futures. And the bid is 15 points. So the short strike is at 67.35. The long strike is at 67.20. Again, always look at the volume and open interest. Needs to be high in thousands. It cannot be low in hundreds. That's if it shows low in hundreds or tens, need to always stay away from that product. And then on the long side, I did the exact same thing. I sold it when this strike was trading at 16 delta. Right now, the market has gone down a little bit more, so therefore the trade is a little bit imbalanced. But at that point, it was right in the middle. When I say in the middle, what I mean by that is if I go in the analyze tab, this part was right in the middle here. When I selected the strikes, I selected both 16 delta strikes on both sides as the short piece, and then long was 15 points out for the futures card. That's how I went in. Everything looked good. The amount of money I put down was about $600 for each E-mini S&P 500 futures contract. This is the total buying power of it, but that's not how much my account was credited for. But I put down about $700 for each contract, so that's $1,400. Maybe the buying power has now gone up to $1,600. Let's take a look at that. Let's take that number as our buying power effect. We've made $150 on average, divided by, let's say, $1,600 affected from our account. That's 9.3% in just a few hours, okay? Not even a few hours, just 1 hour, just a little over 1 hour. So I'm going to close both of these trades out. I'm going to show you exactly how to close it out. You select all of this. Now remember, there are two contracts here. You can trade a four-legged futures options trade. You can do that. So this is a four-legged trade. I don't think you can do more than that. In one trade or one order, you can only trade 4 legs of a futures option trade. Okay. Because I have 4 legs, meaning I have 2 short sides and then 2 long sides for the wick, I'm going to close both of these contracts out. I will select my own price, right click, create closing order, and then buy back the 2 iron condors. Now these 2 iron condors are now trading at 130. Okay. I'm going to just give it at, I'm going to close it at 150 just to get it over with our example here. So I sold it for $3. I'm buying it back for 150. Now you need to divide both of those numbers by 2 in order to get the exact dollar amount. Now I did pay some commission, throughout the process, which was about $9 each way. I was actually say probably $12 each way if this was done in the real account, not in the paper trading account. Now the paper trading account charged me $9 each way, so that's $18. But again, if you do this in your real account, you need to add maybe $12 each way. I think $12 each way, not 3 times, twice. I need to double check this number, but $24. So I made 150 minus 24, let's say, and then I put down $1,600 eventually in this trade, which is still 8% within an hour. If you can rinse and repeat this, this can work wonders. Let's also look at the SPX trade. Okay, the exact same thing. Let me just take you through the SPX example. Again, that trade is also over 40%. So I'm just going to take that off. This is just to get the practice going for educational purposes. This is not my real account. So I do this in my real account, but only in the futures options space because that's what I'm allowed to do. And again, same method, same everything here. I selected the 16 delta strike at the time when this was trading at 67.50, I think. Now it's down a little bit more. So it is down, and therefore our call side has lost some delta. This one has gained some delta because it's gone down a little bit. Okay, so that's how it works. Again, thousands of volume and open interest. $10 white strikes here. So I sold it at 67.10, bought it back at 6700. Again, it was 16 delta short and then 10 delta long. I think that's how I normally set it up. So again, when it was at 16 delta short, I traded this strike, and again I keep it balanced, meaning same distance both sides. You can do different distances, and then that's what's called the broken wing, or a skip striped iron condor setup. So right now this is trading at 2. So again, very low delta. So we'll probably lose some in slippage because there's not enough delta there. But again, look at the percentage. It's up 63%. So I'm just going to take it off right now, and I'll tell you why it's up 63. Because I put down $800 to collect $200. Right? That was simple math by SPX. If it's a $10 white trade and you collect $2, then you have to put down the remaining $8 to start the trade. Let's see where we get filled at. So I'm trying for 70, and it's got filled at 70. Okay. So again, take out the fee. How much money do we make? Now this is to show which one is better, which vehicle is better. In my opinion, both are same. The only reason I wouldn't do this in the futures account, in the future space, is because there's higher commission. If I was trading a slightly longer term product, if I was trading a slightly longer term expiration cycle, meaning my go-to cycles, which are 45 days out, if I was trading that, obviously I will take futures options because then I pay 3 times less money to initiate the same trade, collect the same amount of money. But because these are zero DTEs, the futures options market uses a span margining tool, and they charge you almost exactly the same amount of cash to initiate the trade. So there's no leverage here. There's no capital efficiency in the future space. And therefore, and also the secondly is settled into the future. So there's a probability of getting assigned here. And in order to avoid all that, I would rather do this in the cash space, which is the SPX index. If you look at the percentage of money we made, it's almost the same. If I were to calculate this, we made $130 here. Mine is, I think, slightly less fee. So mine is just 10 divided by 800. Higher percentage here because obviously we did not pay as much fee in this space, and 15% on this trade. So again, overall, SPX is a better vehicle to do these zero DTEs only for 2 reasons for me. So it's cash settles, and then it is liquidity wise, it's almost the same. I think futures are more liquid, but cash settles, and then, or even if it's higher margin, it's higher buying power effect. It gives you cash settles and then less fee. So you pay less fee when you trade it in the cash market. So just remember that these are the 2 main products that I would do zero DTEs in. My other positions are I have some long stock here. I have some short puts in Meta, which were up quite a bit, and I didn't take it out because the idea was to get some stock assigned. But obviously that would not happen in a paper trading account, but it was just for educational purposes. But I'm still in that trade. And then I have some short calls on PayPal. So sorry, a short put in PayPal. These are my other positions. But again, this one was zero DTE trades plus 45%, I would say, overall within an hour or so. And this is how you set it up and forget it for an hour or so, and then just get back in it. If you like this content, you may like my other 5-day options trading challenge, which I run for like 5 days, and then you learn exactly how to set up short puts, short calls, and credit spreads. Those are the 3 strategies that I trade in that program. It's 5 days, no flop, and fully 100% money back guarantee. So if you go on this link, which I will post in my description, it's 100% money back. Just drop me an email, I'll send you the money back. But it's great for beginners and intermediate level traders because we discuss rolling. I discuss 100 times more content and depth in those challenges because I go over all kinds of risk mitigation, meaning rolling mechanics. We don't do hard stops, but which strike. So look at when to roll. That's the biggest question. When to roll and to which expiration to roll, and how to basically defend a losing trade, and how to even take off the winning ones. So take a look at this website. Hopefully you will like my content. If you do, please subscribe to the channel. It keeps me going with everything. Thank you very much for watching. Bye-bye.